This is a demonstration of exercises E5, 23, 24, and 25. For these three exercises, we're going to be using the information for Quality Office Systems Adjusted Trial Balance as of March 31st, 2018. The first exercise, E523, says to journalize the closing entries as of March 31st, 2018. So our first closing entry will be to close sales revenue. So we see on the adjusted trial balance, sales revenue had a balance of $235,700. So we debit it and we credit income summary for the same amount. Now we're going to close each of the expense accounts. So we're going to debit income summary and credit cost of goods sold for $107,550, selling expense for $27,400, administrative expense for $14,200, and interest expense for $2,800. Next, we're going to close income summary. So since income summary would have a credit balance, $235,700 minus $151,950, we're going to debit income summary for the difference, $83,750, and credit retained earnings for that amount. And that is the net income for Quality Office Systems. The last entry will be to close the dividends account. So we're going to debit retained earnings for $41,500 and credit dividends for the same amount. The second part of this exercise says to set up T accounts for income summary, retained earnings, and dividends, and post the closing entries to the T accounts and calculate their ending balances. And the third part asks how much was Quality Office's net income or net loss. And we know that they had a net income of $83,750. I have each of the T accounts for income summary, dividends, and retained earnings shown here with the credit for the sales revenue, debit for the expenses, the net income, and the closing of income summary to retained earnings, and then the closing of the dividends account to retained earnings, and then the ending balance for retained earnings for the year. And then exercise E524 says to prepare a single-step income statement for Quality Office as of March 31st, 2018. So the single step, we start out with the sales revenue of $235,700. And then we list each of our expenses: cost of goods sold, selling expenses, administrative, and then the last one, interest expense. We get a total expenses, which we subtract from net sales revenue, and that gives us our net income again of $83,750. In exercise E525, it says to prepare a multi-step income statement for Quality Office as of March 31st, 2018. So now we're going to do it with a multi-step instead of a single step. So for multi-step, we again start out with sales revenue, but this time we're going to subtract just cost of goods sold. And that's going to give us gross profit of $128,150. And then we're going to list our selling expenses and our administrative expenses. Those are our operating expenses, so we get a total for operating expenses of $41,600. Operating income, which we get from subtracting the operating expenses from gross profit, and that's $86,550. And now we're going to have our other revenues and expenses and subtract our interest expense in that category. That gives us a net income again of $83,750 after we subtract the total other revenues and expenses of $2,800. And that is the conclusion of the demonstration for exercises E5, 23, 24, and 25.